Let's have a look at the INET Bridge markets on the close on Tuesday. The banks on the JSE down 0.4%, financials down very slightly, and the industrial market a 0.2% winner. Thereafter, the gold shares were 2.2% to the good. Platinum shares shooting the lights out, up 4.7% on the day. Resources up 2.8%, led by Anglo American PLC. The top 40 at 1.3%, and the all share itself 1.25% higher, 26,812 on the close. Currencies now. The dollar rand is 7.48. The euro rand is 10.43. Pound against the rand 11.93 as the JSE closed. Euro dollar also as we closed 139.40. Dollar yen 90.45. The gold price doing well, up $8 at $1,112 per ounce. Platinum up $15.50 an ounce to $15.59, and the oil price $73.97 per barrel for Brent crude in London. That's a 1.2% rally. Overseas stock markets, mixed performances. The FTSE barely changed. The DAX in Frankfurt up 0.4%. Dow Jones down a bit. S&P up a bit. And the Nasdaq 0.4% weaker again as we close. These numbers brought to you by our partners, INET Bridge. Not a bad day on the JSE. The banks were down a bit, but apart from that, green across the board. On the line now is Director of Standard, and that is Paul Hansen. Paul, you must have been a little bit worried over the last week or so with the markets coming down a bit, but gratified to see the Dow holding 10,000 and our market bouncing back, not spectacularly, but not badly.
Exactly. We'll take whatever we can get, because the correction, if you look at this correction, I went back to 2003 on the start of the previous bull market, and from April 2003 to the end of January 2004, the market rose about 50%, South African market in rand terms. And then for almost 4 months it went down. I mean, it wasn't that much, it was 12%, but it had a 4-month correction where it had gone down as much as 12. Now we've only been going down for probably 2 or 3 weeks. So we've gone up 56% this time round, and I think 1 month longer. So
in rand terms.
Yeah. So I mean, one's got to contemplate that we could possibly have a 3 or 4 month consolidation correction, and that we could go down as much as 12 or 15%. We were only down 7 a day or two ago, so now we're down less because of this little rally. So I think we've still got to be skeptical about the rally in the sense about it actually ending the correction. And I think things got a bit stretched on the downside, but oversold, just like the dollar's bouncing back a bit today. I mean, it had fallen 8% in 2 months.
Sure.
Now it's bouncing back a bit, weakening a bit. So, I mean, it's nice to see. We take green whenever we can, but we're still a bit skeptical that the correction's over.
What do you think would be healthier? Around about 10%, something like that. I noticed one of the bigger investment banks in the United States of America, was it Morgan Stanley, JP Morgan? I don't know which one exists anymore, but anyway, one of the Morgans or one of the Stanleys talked about 25% down. Now that's quite a big correction.
For emerging markets?
Yeah.
Or for developed emerging markets? Yeah, I think Mark Mobius has also mentioned a number not far short of that, or much different, I think around 20%. And, I think, those are possibilities, but it'll all depend really on the developed markets. One of my favorite analysts in the US said that she felt the correction would end when the commodity prices start to pick up again.
Which one is that?
Elaine Garzarelli. Used to work for Shearson Lehman where I worked when I lived there. So she's been very good over many years, and that's what she says. Look, commodities are down about 10%. When they start to pick up, we probably see the markets pick up. So that's one possibility. The other thing is obviously the US dollar. If the dollar after its little pullback it's having now, the weakening right now, if it then continues to strengthen and goes all the way down to 135 to the euro or even 130, that could possibly put more pressure on stock markets. Simply because, or certainly on commodities, because commodities are priced in dollars, but also possibly on stock markets, just because in the last few years there's been an inverse correlation between the dollar and the stock market.
Yeah.
Now, I don't know if that'll continue, but that's what's happened in the last 2 years. So one's a little bit cautious about a few things.
Yes, indeed. One should be cautious, but history tells us, of course, any dip will be bought into. Have you got lots of money waiting on the sidelines, or not even the sidelines, waiting for this sort of 10, 15, 20%? What is? You must have money piling up. I noticed one of your competitors announcing an incredible amount of money that they've raked in. Are you similarly enjoying good times like that?
not to such an extent because we had a bad 2008 in equities Standard that hit the press a bit. But certainly there is money sitting on the side waiting to go in. No question, people are trying to time when's the best time to go in. So yes, I think it is affecting all countries, including ours, but maybe not to such an extent as Standard.
What do you like in the market at the moment? Is it the commodities? I just get the impression that the commodities are a little bit stretched. But are there some good dividend yielding stocks? What's your favourite sector?
Well, I think we'd have to pick out some of the industrials. I mean, obviously the banks have bounced quite smartly in the last week. It's gone up to post-recovery highs, despite the market falling off like that. Anglo-American, as of yesterday, I think was down 20% from its high, 350 to 280-ish. So that's starting to look interesting. The charts indicate it could go to 265, 275 to 65. But down 20% if you assume you're still in a bull market. That's not a bad pullback. And some really positive comments coming out today from Cape Town on Anglo-American from the CEO.
Yeah, they've cut about 2 billion rands worth of costs or something like that. I mean, I posted the speech on my website, but I haven't read it fully yet. I'll do so tonight. But were you impressed with what Cynthia Carroll said?
Well, it certainly came across very well. I mean, I'm not the analyst on Anglo, and I'm not sure if the analysts were actually looking for what she was saying, but it sounded very positive. I mean, a lot of people have asked whether there's going to be a dividend this year, and I don't see anyone forecasting a dividend this year, although I think they possibly could pay one, because they seem to be doing a lot better. But mostly they are forecasting dividends for 2011 from Anglo's, restarting dividends again.
Sure.
But I mean, I think that, there are lots of fairly good industrial type shares that are yielding good dividends. I think one can look at, the industrial sector has a number of different subsectors within it. So it's not something you can really generalize about, although obviously people tend to. No,
you've got MTN, you've got SAB Mill, you've got Richemont. I mean, which ones do you actually choose? I mean, it's actually quite a misrepresentative index, I think.
It is. It's very much a mixed bag. And, as I say, there are quite a few good shares that you can find 4 or 5% yields on, even after the big run, of last year. That, if you go through it carefully, you'll find them. They are. I mean, take a share like Murray & Roberts, which has gone all the way back down to the 40s. I think it got as high as 65 3 or 4 months ago, and as high as 110 a year or two ago. Gone back to the 40 area now. I mean, those type of shares are starting to look interesting. Low PEs, high dividend yields. Admittedly, a little bit back to the wall with regard to operations, but somewhere along the line when private construction starts up again, then they should do a lot better. So I think there's definitely opportunity out in certain areas, in certain of the industrial shares. Sasol, as you know, hasn't moved yet. It hasn't rallied at all. I mean, it sits around 280, 290, 300, but that hasn't moved, and that's waiting for the rand to weaken, I guess, because it's so sensitive to the rand.
Yeah, that rand factor is quite an interesting one. I don't think we've got time to really discuss that too much. We've got the budget coming up, and we've got all sorts of political topics that are going to, I think, play quite a big role in South Africa over the next few months. But it's the US dollar that's the one. I can't quite make out that US dollar. Here we are, sort of trading between 138.5 and 139.5 last few days. Where is that dollar going to go, and how will it affect South Africa, do you think?
Well, it is in an uptrend at the moment. It's broken its previous downtrend. If you look at the actual dollar index itself, which is an index comprised against the US's main trading partners, which include Mexico, Canada, and others, that quite clearly has broken its downtrend. And I mean, it's coming off a very depressed level. So the implication there is that it could have a way to go if you look at that chart. So, and it is backed up by the euro-dollar chart, where the euro's broken its uptrend, or the dollar's broken its downtrend against the euro.
So the dollar could be in the ascendancy, which means that the rand will weaken, and therefore companies like Anglo-American who have been through a really tough time, but have really pruned their costs and have become a lot leaner, could be the ones to go for, the big, diversified resources companies.
They could be, but what is interesting is, the Australians decided to hold their interest rates quite surprisingly this morning at 3.75, despite the economy growing strongly and property prices at record highs. And that hit the Aussie dollar a bit. And the Aussie dollar is showing signs of maybe breaking down after its big run last year. And being the kind of the leading commodity currency, That could then influence the Canadian dollar that looks similar, not quite as bad pictorially. I mean, it really does look like the Aussie dollar is forming a triple top against the US dollar.
Right.
And then, obviously, the rand being the other commodity currency, could it filter through to us? Well, the interesting thing is today, the rand was very strong. It's quite against the Aussie dollar, and the rand is very strong. I mean, it's down something like 10.40 against the euro. Remember, it was 11 only about a month or two ago. Under 12 to the pound at one stage today. So, I'm not sure. If the Aussie dollar breaks down, which it hasn't done yet on the chart, but close to, will it pull the Canadian and South African currencies with it? I mean, it should do, because they tend to go together, commodity currencies. But there's a lot of different moving parts out there that can, that are hard to predict right now, and the dollar bull market on its own is one of them.
Paul, we've run out of time, but thanks so much for your wisdom. That's Paul Hansen, who's the Director of SANLIB in Johannesburg.